Hello guys, welcome back to my channel and don't forget to like, comment, share and subscribe. Oil edged down slightly on Monday, pressured by expectations of weaker global demand and by US dollar strength ahead of possible large increases to interest rates. Took supply worries limited the decline. Central banks around the world are trying to increase borrowing costs this week to tame high inflation, and there is some risk of a full 1 percentage point raise by the U.S. Federal Reserve. It is that continued trade increases will slow world crude demand and keep upward pressure on the US dollar is triggering long liquidation in both crude and natural gas this morning, said Dennis Kessler, senior vice president of trading at Book Financial. Brent crude for the November fell 56 cents to 90 a barrel, a 6% loss by 9 a.m. ET. US West Texas Intermediate for October is at 47 cents or 6% to 94 per barrel. A British public holiday for the funeral of Queen Elizabeth limited trade volume during London Horse on Monday. Oil also came under pressure from hopes of an easing of Europe's gas supply crisis. German buyers reserved capacity to receive Russian gas via the South Nord Stream 1 pipeline, but this was later reversed and now gas has been flowing. Crude has soared this year, with the Brent benchmark coming close to its record high of 14 in March after Russia's invasion of Ukraine exacerbated supply concerns. Worries about weaker economic growth and demand have since pushed price lower. The US dollar stayed near a two-decade high ahead of this week's decisions by the Fed on other central banks. A stronger dollar makes dollar-denominated commodities more expensive for holders of other currencies and tends to weigh on oil and other risk assets. The market has also been pressured by forecasts of weaker demand such as last week's presentation by the International Energy Agency that there will be zero demand growth in the fourth quarter. Despite those demands, fair supply concerns kept the decline in check. The Organization of Petroleum Exporting Countries and Allies led by Russia, known as OPEC Plus, fell short of its oil production target by 3 million barrels per day in August. An internal document showed in July OPEC Plus missed its target by 2 million pdp. The market still has the star of European sanction on Russia oil hiking over it. As supply is disrupted in early December, the market is unlikely to see any quick response from US producers, ANZ analysts said. Easing COVID-19 restrictions in China, which had dampened the outlook for demand in the world's second biggest energy consumer, could also provide some optimism, the analysts said. Wall Street's main indexes slipped for the third straight day on Monday, led by declines in healthcare and energy stocks as investors worry that another massive interest rate hike by the Federal Reserve could tip the U.S. economy into a recession. Five of the 11 S&P 5,000 sectors were down in early trading. Healthcare stocks fell 5%, weighted by a 5% drop in the share of Moderna Inc. The energy sector slipped 1% as oil price declined, pressured by expectations of weaker global demand and by US dollar stretch. The S&P 5000 and the Nasdaq locked their world weekly pre-tax drop since June on Friday as markets fully priced in at least a 75 basis point rise in rates during the week, with Fed funds futures showing a 21% change of a whopping 1000 bps increase. Okay guys, maybe that's all from me. Thanks for watching and don't forget to like, comment, share and subscribe.